We're a little ways into the morning session on this Monday, and markets are already starting to wrestle with what the last couple of weeks of the year might look like. I'm Grant Mercer, this is Storm Stock Solutions, and let's bring some clarity to the chaos in today's tape. The big storyline emerging over the last hour is volatility risk into year-end. According to reporting from MarketWatch, a delayed November jobs report and a key inflation reading still on deck could set the stage for wild swings as funds rebalance and investors lock in performance. That mix of thin holiday liquidity, big macro catalysts, and year-end positioning is putting traders on alert for sharper intraday moves than we've seen in the quieter stretches of this rally. On top of that macro backdrop, the AI trade is back in the spotlight, but this time from the risk side. A fresh piece highlighted by MarketWatch quotes BCA research arguing the AI boom could turn to bust in 2026, with high valuations leaving the big tech complex vulnerable to a meaningful sell-off. Now, that's a forward-looking call, not a guarantee, but the tone matters. When strategists start talking about trade of the year, ideas tied to an AI unwind, it reminds everyone how crowded and sentiment-driven that space has become. Into today's session, that kind of narrative can make traders quicker to take profits on strength in AI leaders, and more sensitive to any wobble in rates or earnings expectations. Staying with tech, another MarketWatch piece points out that some of the once reliable slower growth tech names, think data and IT research firms like FactSet and Gartner, have actually been among the S&P 500's worst performers this year as money chases pure-play AI stories. The debate now is whether investors are missing the longer-term durability of those business models. For intraday traders, that's a useful lens. Are we seeing a simplistic AI or nothing market, or do we start to see rotation back into more traditional cash flow-rich names if the AI bubble talk gains traction? On the opportunity side this hour, the strongest theme isn't a hot momentum stock. It's personal balance sheets. One widely read story walks through the decision facing a 60-year-old planning to buy a parent's home in Georgia, weighing a traditional mortgage versus a structured family loan. It's not a trade idea, but it does reflect growing interest in how to navigate housing and intergenerational wealth at a time when rates, lending standards, and home prices are all in flux. Financial and housing-related names can be sensitive to that broader discussion around affordability and credit access. In the background, there are a few sleepers worth keeping on the radar as sentiment indicators. One is a piece on Howard Marks and why he's never made the case for gold or Bitcoin in decades of memos. Whenever a high-profile investor questions the investability of classic alternative assets, it can feed into how people think about hedges, correlations, and where to park cash when they are nervous about equities. Another is the story about everyday traders posting screenshots of big wins on risky options and speculative plays. Those kinds of anecdotes tend to surface when risk appetite is elevated, and can sometimes mark points where professionals start asking whether positioning has gone too far in one direction. Also, in the sleeper category, articles on Gen X lagging in retirement savings and couples asking, where are we vulnerable financially? Those may seem like personal finance stories, but together, they speak to a cautious undercurrent. People are enjoying market gains, but they're also reassessing risk, which can influence flows into more conservative strategies if volatility picks up. Into the next hour, I'll be watching a few things. First, how index futures and the mega-cap tech complex digest that AI bust narrative. Do we see any noticeable fade in the biggest AI beneficiaries? Or does the market shrug it off as just another headline? Second, any chatter around the upcoming inflation print and that delayed jobs data. Even without the numbers today, the expectations game can move yields and growth stocks. And finally, whether we get more evidence of speculative froth in single-name options, or if traders start to quietly de-risk into strength. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,